All right, here we go. Woo! My name's Joe Solari. We're going to talk some author business basics here. I'm going to be talking about this from the perspective of somebody that has worked with a lot of authors on their businesses. Some of the guys that have just started, other folks that have got a lot of revenue from their career, and give you some basic stuff that's going to actually give you a competitive advantage. So for those of you who don't know me, my name's Joe Solari. I help authors build great businesses, and there's a rumor around that I'm taking over the show next year. All right, so we're going to cover some basics. I'm going to go through some simple things that I think are really important when you get started as an author. A lot of the stuff I'm going to talk about is what not to do, things that can be distracting, things that make you like, well, maybe I need to do this and that. And then, I'm not saying it's you, but there's some people that may use these things to not write a book, okay? I'm a big believer in what has to happen is we need to get a product into the market, and we need to find some customers to buy that product, and from there we can adapt, right? We can make the product better, we can make your branding better, we can make your market better, but whatever it is we're trying to improve, we have to have something to improve on. So I'm going to go through these three things. The last one, in budgets and plans, I know that sounds so exciting, you can't wait till we get to talking about budgets and plans. What I'm going to do is I'm going to walk you through a tool that I created that helps you to plan out your cash flow for your business going forward several years. And you'll hopefully by the end of this presentation understand why that's so important and gives you a competitive advantage. So let's start out and talk about something that I get questions every year about, talk a lot about, and can be really confusing, and that's legal structures and what you should have set up as a business owner running a business, because that's what you're doing. Sure, you're going to do something that you love, writing your books and interacting with readers and all that good stuff, but in the end, we're trying to make some cold, hard cash to pay the bills. I look at this in regards to the kind of money that you're making, the profit, not gross sales, but what's left over after you take out all of your expenses. And this gives you some guidelines to follow as you start thinking about where you are on this journey and what you should get in place to do the right things and have a foundation to build on. And you know, you may think, I'm going to do this right, so I'm going to make sure I have my business set up and I have this trademarked and all these things. And what concerns me the most about that is that you have a finite amount of money that you can spend to do this. And in my view, the best place for that money to be spent is on the product. It needs to be in the cover. It needs to be in the editing. You giving money to your local state government so that you can set up a company may be a waste of money if it's done at the wrong time. So what do we do? If you're just getting started and you're below $10,000 in profit, the things that I really believe you need to have in place is to get an EIN, that's an employment identification number. This is something you get free from the government. You go to irs.gov and get this, and you set up a separate EIN. And why we're doing this is not because we're setting up any kind of legal entity, but we're going to use this number instead of your social security number when you go and set accounts up. And this is really about identity theft and protecting yourself, because the most common thing we do as an author when we get started, we go set up our PayPal and our KDP account, and we put our social security number in there, and you know, we're sitting in a casino that was just hacked for $50 million. We trust our data with people that are doing their best that they can to protect it, but there are people that want to get their data more than they can protect it. So let's put ourselves in a position where we put in some security ourselves. So we have that EIN number, and we're going to use that number to get a separate bank account. Now, when you do your taxes at the end of the year, you're going to still file your taxes on your standard tax form on a Schedule C, and you're just going to use this information on that form. So there's no real special tax stuff we're touching, but the idea is by getting that separate account set up, we now have a repository for all the income and all the expenses. At the very basic, when you get into accounting, it's really what's the ins and outs of that bank account. When you start to do accounting and things like QuickBooks, it's just organizing those transactions. So if we start here with having that separate bank account and you do that, you'll be in a situation where even if you don't do any of the things I talk about through the year, at the end of the year, you should be able to go in. It'll be a pain in your ass because you waited 12 months to do it, but it'll be there to see all my income, all my expenses, did I have a profit or not? I believe that you should work on having a separate credit card when you're doing this stuff. You may not be able to set it up in the business at this point since you don't actually have a separate business, but have a separate card that you're using for this. So again, you're helping yourself organize yourself. And from a legal standpoint, what you're doing is you're operating as what's called a sole proprietor. That's just how the IRS thinks of you. There's no special thing you have to do. The fact that you're making money means you're a sole proprietor in the United States. So you're going to be going through your process up until you start making more money, just running your business this way. Now, when you get to the point where it's $10,000 or more, it starts to make sense economically to do things like set up a company and start paying yourself on a payroll. And what I'm using as the differentiator on this is the tax savings that you can have. If you're not making this kind of money, you can't achieve those tax savings. And then later on, there's other things you can do, like how you invest your extra profits to making sure that you're taking care of your long-term interests, like your retirement. So let's talk real quickly about sole proprietorships and doing business as. A lot of questions that I see come to me is like, well, do I need to set up a DBA because I want to have a special press name for what I'm doing? No, you don't. And if it's that important for you to set up some type of designation separate from yourself, the effort and the money difference to just going ahead and setting up a company, in my view, it is better to do that than to go through the process of setting up a DBA. The DBA still leaves you legally liable, and your personal assets and your business assets are mixed. You just have this name that you get to use in the marketplace. Whereas if we go through the process of setting up a company, we're then going to have a separate legal designation from your personal assets, and you start to have some protection. So let me go into some of those ideas. And this is where people can get even more confused with the words get thrown around. We talk about a company. There's different legal designations that states have for when you set up a company. Most states, setting up a limited liability company or an LLC is the cheapest, fastest way to set up a company. Can cost anywhere from $50 to, I think California is running about $800. Most are somewhere between $150 and $200. From a tax perspective, this is identical to if you had your sole proprietorship. It flows back to your final tax return. So you're not going to really save any money with the tax situation. All you're doing is setting up this different legal entity and creating this new name. Now, a corporation is a different type of company, and it has a different structure. The costs can be similar, but when you set up a corporation at the federal level, it's taxed as a corporation. So there's an additional tax that you're going to have to pay. So in most places, that doesn't make sense to do. So we go to this third piece, which sometimes people will call it an S Corp, but it's not actually anything other than a special designation by the IRS for either a corporation or an LLC. So when we typically do this with clients, what we're doing is we set up an LLC, and then right after we get that filed, we go and again, this is for the S chapter election with the IRS is just a form you fill out, and we say we want to be treated as a subchapter S. When that happens, how your taxes are paid are different. And there's some rules that go along with that. You need to be paying yourself a reasonable salary. In our view, that's usually about 50% of your profit that has to be going through a payroll. And you have to file a return for this company. So again, when I'm looking at this, I'm trying to help you guys think about when is the right time to do it, with the idea of the extra requirements that it's going to have for you if you start doing this stuff, right? So like, are you saving enough money in taxes that it makes it worthwhile for you to finish out another tax return and for you to have to pay yourself on a payroll? So those are some of the things you have to think about, again, through those levels. Now, why do all this stuff? Why worry about the business stuff at all? I mean, I'm here to write books and make money. Well, first off, when you use the tools that you're given in the tax code and with these legal structures, you add advantage to your business. We're in a situation where we're competing with people that they think it's okay to, like, well, you know, I'm creative. I don't have to be a real businessy person. Okay, then don't. But for those of us that decide to use these tools to our advantage, we're going to have a competitive advantage in the marketplace. We're going to be able to take this information and make more cash. We're going to make more cash. We're going to keep more cash. And the important part in this business is how fast we can cycle that cash through. Because if you're getting a return on investment, every time it goes through your business, it adds a little more cash. And this is what the driving thing in your business is. So when we're talking about how to think about your business and the performance of your business, I know it gets really easy, especially you come to a conference like this and you hear some amazing people talk about how much money they've made. It's not about how much money they make, it's about how much money they keep. Okay? Your business has one purpose. The sole purpose of your business is to deliver cash flow to you, the investor in this business, right? It's really easy as an entrepreneur to lose sight of that and think, I love what I do and I just want it to work. I'm going to put more in, I'm going to put more in, I'm going to put more in. And you never stop and think about the fact that if you're the investor in this business, you expect a return. So if you come into this with this attitude that you're going to have a return on that investment from day one, even if it's 50 cents, you're always going to be focusing on the profit first. You're going to have more money to reinvest in your business. So how can I help you do that? I'm going to switch out of the slides in a second here. I'm going to walk you through a tool, but this is on my website. It's under the Capital Planner. It's a tool I built several years ago, and it's to help you plan out the money you're going to need to get to profitability. Guess I have to completely exit out. That's okay. So this is the tool, and the way it's designed is you can come in here, and I tried to do it from an author-facing perspective. So how many words would you write in a day? And let's say you can write 1,000 words a day, and you plan to work. How many weeks are we going to work this year? Yell out, come on. 59. Thanks, Logston. Yeah. Do I want to put your number in? Maybe how many weeks you work? Like 15? Kidding. So let's say it's 35. How many days a week are you going to write? And then we take in whatever you know is the average number of words per book. And it's going to calculate for you how many books potentially a year you could put out at this level, right? Because production is a key component to how we're going to figure out what we need to do. Because you're going to have fixed costs, which we're going to get to in a moment, and you're going to have production costs, things that are associated with each book you produce. So if you're a fast writer and you're going to be doing rapid release, those costs are going to multiply, right? They could be, if let's say you're writing 2,500 words a day. Now you potentially have the ability with that schedule to put out 7 books a year. Okay? Now we go into a section where you go in here and you take the time to start building out your costs per book and for your business, the things that you know that you need to do. So do you have like a website cost, what your editing is? We could say, okay, well, I'm doing big developmental outlets or something, whatever you might do, you can plug those numbers in. I got a mailing service, that's 240, ooh, not that much. Wish I had a list that big. The stuff that you buy, the courses that you buy, right? I'm gonna spend almost $1,000 in courses. Whatever else you'd build in there. See how that number's been going up? Like, this may be a little disconcerting and disheartening when you see this number, but it's the number. It's the real number of what it's going to cost for you to get your business off the ground. And we also have a section here where you can go in, and let's say because you've already been doing this, you've got some books that are already in print, right? You've got 20 books. We'll go with the theme, right? And they're making $4 a day on average. The rest of this chart is going to punch out how much money and your costs each year. Now, why this looks so great is because I put in these existing books. If you're just starting, watch that bottom number. So I would suggest, if you're really serious about this business, that you take the time to do this, and when you see that number, figure out how you're going to pay for that, right? And if it's something that's going to take some time, don't get depressed and be like, oh, it's not going to work out. Understand you're coming into this business much more educated, and you're in a position where you can take that information and adjust things. You can say, well, maybe now that I know that it's that much, it's just not realistic for me to write 7 books. I'll write 4. And now my number gets a little bit better. So you can use this to kind of figure out and get a realistic plan for what you can do over the next 12 months and change things to maybe you got to save some more money to make this whole thing work out. Let's go back. So, it's important to understand with having a plan, right? You spend a lot of time, you do that. That's not how things are going to turn out. I've done a lot of things in my life, had been in a lot of different industries, run several different businesses. I'm getting prepared to take on this conference. We're going to have a budget and a plan, and I know it will be 100% off. Like, it will not go as planned. The importance of that plan is that then I can reference how far I'm off from what I thought was going to happen and have some idea how I'm going to adjust off of that. It really sets guardrails up for me to see, like, whoa, something really bad is going on here. I need to readjust. Or if something's really good going on here, that I can adjust to that as well. The single biggest thing that we want to make sure we do is not run out of cash. That is the number one thing that wipes out small businesses. And you, as an author, are a small business, and if you haven't published a book yet, you're bringing a new product to the market that hasn't been tested. This is a highly risky venture. And the better we can shift these probabilities in a direction that's positive for you, the higher success rate you have. Because what happens when you run out of cash is you start doing stupid shit. You start thinking about, what can I do to just make things work now? Maybe I should pull some more money out of my 401k. Maybe I should just throw a ton of money at advertising and see if that turns things around. And you dig yourself into a bigger hole in the hope that it's going to be the thing that gives you that home run and turns everything around. And it doesn't work that way. The winners in this game are the folks that get themselves in a spot where they're not under a lot of stress financially and work at this deliberately year over year. Now, I wanted to touch on one last thing, and then we'll kind of open it up for questions. And I want to make sure this is a session that typically needs a lot more questions answered than anything else. I've got another tool for you. And again, any of these stuff, it's not a sign up. They should just download to you. In the case of this one, you may have to load Notion to actually see it. But this is a checklist that I've developed over the last few years to help people think through about when is it time for me to go full-time and how do I go full-time. And I think that the people that have done it the best, in my view, that have been successful in moving from their day job into a full-time career without a lot of hiccups are the ones that start looking at this list early and start building the points in this checklist into their daily plan, right? They're not just thinking about the money that they need to have in their account so that they can launch books and do marketing, but they're also looking at the kind of money that they're going to need to set aside so that they can afford to go full-time. And, there's all kinds of great stories of folks that have done things in a kind of cavalier way and it worked out, but there's far more people that have tried to make it work against all odds and end up at a less enjoyable day job again. And that's what we're trying to do here, is help you have some ways to think about this as a career that maybe take you 18 months, 2 years, 3 years, 5 years. I know those numbers seem long, but the reality is that most small businesses that start up take 3 to 5 years to get to break even, let alone wildly profitable. And anything that you can do to help yourself be in a position to take the odds more towards your success is going to be what adds up over time and builds into some real advantage in the marketplace. If you start today focusing on that, how much money do you take home every day out of every dollar of royalty that comes in, it's going to make your business scale up faster because you're going to have the money to do the things you want to do. And I'll give you some numbers because I've looked at a lot of author businesses. A lot of folks that you'll see on stage talking about, I made $1 million. We've looked behind the scenes and seen their businesses. And on average, people that come to us to have work done with us, they're making 10 to 15 cents on the dollar, right? Now that's fantastic. I mean, that's for a lot of businesses to have a 15% pre-tax return is pretty good. But if you think about that from the perspective of, that means they made $150,000 on $1 million worth of sales, you should take pause in that. It's a lot of work to make 150 grand. Working with businesses that focus on cash flow and working on profitability and make that their priority, our client group gets up to 44%. So you can sell near half the books somebody else sells and make more money. So the people that I really respect in this industry are the silent giants, the folks that are sitting in the back of the room, not necessarily on stage, that are maybe selling $200,000-$300,000 worth of books and keeping 50% of that money. Like, they are going to last in this industry longer and be able to deal with whatever crazy, goofy stuff comes our way, whatever change gets thrown at us. And it seems to me, the time that I've been here, to be faster and faster paced change. They're the ones that are going to ride through this in a much more sane way than those of you that are just like, well, I'm just trying to make as much money as I can in this whole thing. So I would say, look at this resource. It's something that it occasionally gets updated as I get some new information, but it really helps you to think about if that is your goal. And I'm not saying, here's the other thing is, if you're the person in the audience here that's like, you know what, I just kind of came here to learn how to be really good writing my books and write a couple books and make some money if I can, that's a laudable goal. It's so easy to come off from this place and be like, not only do I need to be working full-time doing this, I need to be a book machine and make $1 bazillion. If that's not what makes you happy, if that's not your goal, then don't make it your goal. Focus on what you want out of this and then figure out how to do it in a safe way, in a sane way, and in a profitable way. And with that, I'm going to open it up to questions. Way in the back. They got to, oh, by the way, there's a mic in the middle there so that they can hear you on the live stream.
Hello, thank you. What would you say is the difference or the benefits contrasting the LLC versus the S Corp? Why would you do one over the other?
So in my view, it's when you would do this when you get to the point where you're making the kind of money where you're going to see some tax savings from that. The people that may want to set up an LLC early on, the examples that I've seen in the past are their personal identity protection is really important to them. Like they're writing about like super spicy, slutty jugglers and stuff, or they're, writing nonfiction books on how to build your own flamethrower. So there's like huge liability. So those people, it's like it makes sense to create that legal structure. So though, if something happens, it's like, oh, you're filing suit against my company, not against me personally, and my personal assets are out of play in that situation. But since most people I talk to here, they're really looking at this kind of entrepreneurial process of bootstrapping an author business, getting it to the point where they're really designing it to be the vehicle for them to go full time. It's like, okay, once you get to this point of this $10,000 in profit, in most states, it starts to make tax sense where you're saving tax money to go through the extra effort of setting up the S Corp, starting to pay yourself a payroll and running a payroll, and that second tax return that you're going to have to do for the company that then flows to your personal return.
Okay, so we have a question from an online viewer. Where do I find your book, Treat Your Writing Like a Business, please?
Wow, right there. Nice plug, Mom. Treat Your Writing Like a Business. You have to go to joesolari.com. I sell it direct. And when you do get it, if you buy it, there's also you get a bunch of the spreadsheets and swipe files and stuff to kind of set some of these things up. So that would be where you go.
Mom, was that really an online question? Hi, Joe. I recently published my first book in the fall, and I opened my checking account thinking I'm being smart, but I used my own social.
Yeah.
Is that easy to convert to an EIN?
Yeah, well, it is. The reason I pause is every time I have to deal with the bank, and they treat me like I'm Al Qaeda. But so yeah, that's something that you could get the EIN number, and you would then go on your bank account. You have to go to your bank and then walk them through that.
Okay.
You shouldn't have to close and reopen the account. That should be something they can switch. Yeah.
That's perfect. And a quick follow-up. I'm in California, and LLCs are really expensive and inefficient.
Yes, they are.
I'm not up to the 10, 15,000, but when I do get there, do you recommend using agents to be in another state officially and using that whole agent system?
So that's a great question, and what you have to understand about that basically screws you out of the protection of the LLC in the state that you're in. So there's this thing called nexus, right? And that means where does your company exist? Well, there's some people out there that'll say, well, go incorporate in Wyoming, and it's cheaper, and you'll get this protection. But what happens is now you have a company that's in Wyoming and recognized by Wyoming, right? And companies are recognized by the states that set them up. For California to recognize that Wyoming company, you have to go and set up a foreign entity in California and basically say, hey, my Wyoming company is operating in California. And guess what California charges for a foreign entity? $800. So where your company has nexus as an author is really where you live, right? It's where you're doing your writing. It's where you're, everything that your business is doing is. So my suggestion is setting up that company in the state you're in, and you have to pay the taxes there, and that's the joy of living in California. I live in Illinois. We're trying to take you guys out as number one in fees, so, and we're working real hard at it.
One more online question. I formed an LLC with an EIN, and my EIN stopped working. I can't set up an account with Draft Digital, for instance. Where can I go to figure out how to fix this? My personal accountant has no idea.
Wow, that's a tough one because I don't know what it means by not working. Yeah, so the EIN is, and it's really quick to get one of these set up. Like we could all go on irs.gov right now and set one of these things up, answer the question survey, and it'll be sent right to your email. I would want to understand what's not working on that. Is it Draft Digital's having an issue with processing it? Because, you know, that's probably a Draft Digital thing, and I would go buy Dan Wood a beer and ask him to fix it for me.
So my question is on financial software and tracking your finances and all of that nonsense. I am finally going to admit to the world that I am terrible at Excel. I try and try and try, and I always mess it up. And that's how I've been doing it for years and years and years. But as I've researched financial software, I'm also terrible at Quicken, and it's super expensive. Do you have recommendations for authors of things that are good for them?
Yeah, so there's, at a basic level, if you just look at reconcile your bank account every month, which, come on, we don't all do that, right? Like actually reconcile your bank account. That's a really good start and probably puts you in the top 1% of financial responsibility in this country. But there's a software called Wave that's free. It's pretty good. It hooks up into your bank account and it helps to do that. But again, you have to be careful because there's times where it can be because you have to allocate transactions. And that's where things typically get messed up. And here's another thing. This is, something just because of the business that we run. PayPal sucks with every software on the planet. Like my business that I have with Lisa, where she's doing accounting for authors, where we always have things go awry, is with how PayPal interacts with your bank account, with interacting with software, and double counting stuff or mislabeling it as a transaction. And we've even seen accountants that say, well, you can't use PayPal. It's like, you can't do it. It's like, no, you're just too lazy. You don't want to do the work, right? Like in this industry, it's something that a lot of people for working with their contractors have to do. So once you go into the situation where you're paying yourself, our preferred deal is going to QuickBooks and using their accounting and the payroll piece. Yeah, it's expensive. It's cost me $70 a month, but it makes it easy to do. There's a whole line of people over there. You're welcome.
Another online question. I would love to know more about paying yourself as a shareholder. How does this work before you are making 10K? Just a budget transfer between accounts, ? Or employing a bookkeeper, also ?
Yeah, so if you're a sole proprietor or you're running an LLC without an S Corp, the way the IRS treats it is, for example, let's say you sold $4,000 worth of books and you had $3,000 worth of expenses, you had $1,000 profit. As an LLC and as a sole proprietor, you owe income tax on that $1,000 at the federal level. You have whatever state tax stuff too, but you owe federal income tax on that, and you owe self-employment tax, which I think it's like 15.8%. So if you were to do that, let's say at $1,000 at the end of the year, you don't have $1,000, you have $1,000 less all those taxes. For author math, let's say that's $500. You live in New York or California, so 50% tax rate with everything might not be too far off. You would just take that $500 and move it out. And because you've paid taxes on that, if you were to invest that money back in the business, now it comes back in as capital, and it's no longer a taxable thing when it moves in and out, because that wouldn't be income. After you set up as an S Corp, there's two ways money comes out. There is a distribution like we just talked about, and then there is your payroll. And what we typically do with authors is whatever their profit is, and let's say it's $50,000 in profit, we would pay them $25,000 a year as salary, and you could do that once a month or do it over a quarterly basis, however it is easier for you to do, and then that other $25,000 would come out as a distribution. And the unique thing about an S Corp election is the self-employment tax portion is built into the payroll. That's your FICA contribution and the payroll tax. So that works out to 15.8%. The dividend that comes out, or distribution, there's income tax due on it, but you don't have to pay self-employment tax on it. So you just saved yourself 15.8% on half of your profit. And that's where the tax advantage comes of an S Corp.
Well, you kind of answered the question I was about to ask. But I was going to ask, is there kind of a rule of thumb for S Corps for how much you should put aside? I understand that states and even countries are different, but do you have a rule of thumb?
Yeah, so I kind of talked about this idea of this 50-50 split. And so the way the IRS says is, the ruling is, it's like there needs to be a reasonable salary. The way we're playing this is that our observation of most authors, it doesn't matter how much money you make, it's very cyclical, right? You have a launch, you make a bunch of money, 3 months later, not so much, right? So we're trying to balance not having to, move a salary up, move it down, move it up, move it down, have it on a reasonable level so that you typically are covering what you're doing. And by setting it that 50-50 level, as you scale up, it gives you a nice guideline as you go along. And if the IRS was ever to ask you, say, well, you can see when I was making 10 grand, I paid myself 50%. When I was making 100 grand, I paid myself 50%. There's age-old scam, and people try it every year. They're just another knucklehead that does it, is like, well, I'll set my salary at 5 grand, or I'll just pay myself a little bit, and then I'll take all this money out as a distribution. You don't think the IRS hasn't seen this a million times? And what they do is then they come in and they get to decide what a reasonable salary is. And they have pretty good justification, seeing as you're the sole person doing all this work, that all of it should have income tax based on it. So that's why we do it. And then by doing this, we've kind of set up this standard in the community where, like, if they were to go out and say, well, what is the rule for authors? We could also, I do 50%, I do 50%. Like, so what's the rule? And a lot of times that's how the IRS establishes these new rules.
Another question from a virtual attendee. I am an American citizen living overseas. How does that affect the Nexus LLC issue?
Well, that depends on which country you're in and what their tax laws are. My experience has been, because most people, if they're overseas and they're selling books, the majority of their income is derived in the United States just because of the size of the market. And if they're a U.S. citizen, as far as Uncle Sam is concerned, it's time to pay. So they would have to file taxes in both places to determine if there's some tax liability in one or both, and if there's any type of tax credit in one or both. Next.
So I have 2 pen names that I write under. One is attached to my real name. It is just my real name that I write under. And the other is a pen name that I keep very distant because I write books about slutty jugglers. I want to have that sort of like separation and protection there, but I don't know if it's a good idea to set up 2 different businesses, because then the business that's attached to one is also attached to my real name, but then it's also a lot of extra work.
Yeah, and that's something you're going to have to weigh out. So it's just kind of walking through that. Like, if it was like you were, dead set, you did not want anybody to know, and money's not an object, I would set up a company in the state where you're in, and I would have that company own an LLC in a place like Wyoming where you don't have to, they can't go and look up who the actual owners are. That's part of their little fun stuff that they do in Wyoming. And then you've got some pretty good protection. But now you have to pay for 2 companies, and you're going to have to do all that fun stuff. Depending on your comfort level, just having one company as kind of a holding company and doing a bunch of stuff in is probably good enough. I mean, if somebody's hell-bent on figuring out who you are, and like they'll do it, right? But like my wife and I, we have a company that we set up that we do everything. It's one bucket. Everything, her consulting, her trip stuff, all goes into that, right? Now, as our business has gotten more sophisticated, like when, for example, what I'm doing, when I took over this show, I set up a Nevada LLC because everything's going to happen here that is owned by our company, and that's the company that signed all the contracts with Don Corleone that owns this hotel.
Thank you.
Hi. Is there ever an exception for what you referenced earlier in your presentation where having a doing business as, you don't recommend it when doing a brand name or a pen name or buying the business license under 10,000? Is there ever an exception to that rule?
Sure. There's all kinds of exceptions. I mean, sometimes it's like, well, I already did it. Like, that's probably the most, like, I did it, and it's like, oh, fine, cool, that's fine. You did it. But like, this is like, when you go to the point where it's like, I think it's time for me to create this name. I want something different. Maybe it is you want to have it where, so you can say that there's this press, or you just want to have something to kind of organize this under. In most states, the antiquated rules for setting up a DBA are more of a pain in my ass than setting up an LLC. So that is why I'm going there. It's like most states you don't have to go run, an ad in a local newspaper for a month and some of the weird stuff that you see that's like left over from the 1800s. And so that's kind of why I go that way. And it gives you that added benefit of, oh, now I do have a company. There is this legal entity that's separate that can protect my assets if for some reason something happens.
Thank you.
My husband's military, so we move around to different states and different countries. If I were to set up an LLC, would I need to, and move to a different state, would I need to set up a new LLC? Or if I moved, I don't know if there's exceptions for military when it comes to setting up LLCs.
So we've had some clients in the past that are, same kind of situation. Wife is writing and doing well, and husband is military. That's something you really need to look into, depending on where you're at and where you're stationed, because in one case, because of how they had moved him around and how the laws were, and it has to do with states too, is like they were living in Ohio, but their residency, for everybody concerned, was still Florida. So it meant that they had to file taxes in Florida and in Ohio, but like they didn't have to pay taxes in Ohio. So you're gonna have to check around. I wouldn't be setting up a company here or there. What I would want to do is kind of know the situation you're in, and if you've got some kind of loophole like that, and then maybe what you do is be like, oh, if I can go set up a company in Florida where there's no income tax, and I can get the special treatment because of the military, God bless, do it.
One more virtual question. My LLC is set up for both my work as an author and my work as an editor and ghostwriter. Do you recommend having a completely separate LLC for my author stuff?
Nope, not at all. I think that all you're doing is complicating. When I set up things separately, like for example, taking on something like this show, or if I'm partnering in a joint venture with somebody where we have to have some separation of, are real clear guidelines for how we're going to be contributing money into this new venture. That's when I do it. And like I gave an example of with Susan and I, we just have this one company and it's kind of one big bucket and expenses all go into it. Revenues all go into it and it sorts itself out at the end of the day. Oh, we're out of time. One last thing, anybody that wants to talk to me that didn't get a chance to, I'll go outside and we can answer some questions. Also, on my website, joesolari.com, there's a spot for you to go sign up for a slot to speak with me on Thursday mornings. It's free. I've been doing this for years. I continue to do it. We'll just hop on a Zoom call. Don't be shocked when you get on there and you don't see openings until February because people know about this. Oh, and then next time you'll see me, I'll be with two people way cooler than me, Bonnie Paulson and John Lugston. And we're on Thursday at 2-something-ish, and it'll be cool, and it's all about marketing and customer retention, so be there.